In the equity quadrant today, the S&P was actually a little bit lower, about 0.25%. Wasn't very heavy movement, wasn't very heavy volume, and we did kind of hold up at critical support this morning. Even though we hit those lows and bounced up, the overall trend seems to be in place. Momentum indicators are pointing to higher highs going forward, although that is no guarantee. It is technical analysis and it is price action based, and this little bit of a pullback probably could use some more rotation down before it were to hold strong. The three major indices well above their 200-day moving average. Only the Russell 2000 is still below it, and the Russell 2000 hit it today and fell. Unlikely that the Russell 2000 pulls the other three indexes down. It's more likely that the S&P, the Nasdaq, and the Dow pull the Russell 2000 up, and again, the S&P still pretty strongly entrenched in a short-term uptrend. Looking at the retail sales figures today, the headline miss could mean a more aggressive Fed, and the CME Fed Watch tool certainly priced that in. Again, it didn't take the S&P to new highs or anything today. We had a negative close, but it did support a little bit more selling that might have taken place given the aggressive nature of the potential Chinese retaliation to the potential passing of legislation in Congress that is going to support the Hong Kong protesters. China threatened that retaliation, but we saw the CME Fed Watch tool, based off of the retail sales number, actually move back up above 85% probability of a 25 basis point rate cut in October. But maybe more important than that, we got a December probability back up above 20%. It had been down around 8, 9, and then 12% over the last few days. So again, that retail sales number could mean a more aggressive Fed if the data were continued in this way. And then overall today, it was pretty much a defensive day. Investors were playing defense. You look at the sectors, and it was materials and consumer discretionary that led, not so much utilities, but those are the two leaders. And that again is generally indicative of a market that wants to stay higher, but investors are playing a little bit more defensively. We've talked about that theme through most of the last month or so. So overall, S&P negative, but didn't really break the short-term uptrend that we've been in.